Well For Real YouTube channel. It is Tuesday, October 22nd, 2024. Just had to jump on a live with everything going on, in the markets and the economy and the election and the government and all this stuff. Hadn't been live for a couple weeks, so let me just get right down to it, guys. Everything looks like it's fucking melting down. Like, everything really looks bad right now. I know, hopefully you don't come to this channel for technical analysis, because that's obviously not what that is. But seriously, guys, let's recap what has happened since the September 18th 50 basis point Fed rate cut. I mean, we're talking about the yield on treasuries before that. And when I say before that, obviously I'm being very obtuse, but I'm saying like around the August, first half of September time frame. Okay, even going back to like the beginning of August, when the markets looked like they were going to tip over on August 1st, 2nd, and 5th. 10-year Treasury was somewhere around, like, I want to say like 3.8%. And again, I don't know if that's as far back as early August or as close in as September 18th. But the bottom line is, in that 6-week window, you had a 10-year Treasury rate at 3.8%. Now, if in my feeble mind I understand correctly, the 10-year Treasury rate is the rate that really is queued off of for lending, like for mortgages, for car loans, for credit cards, things like that. It's not like the Fed funds rate. It's not the rate that the Fed is saying, oh, we're cutting rates and now rates are this percent. It's the 10-year Treasury, right? And I guess, think about it, 10-year Treasury is like right in the sweet spot, right? You got 30-year bonds, you got 20, I think you got 20-year, then you got 10s, 5, 7, 5, 2, 1, something like that. I can't always fucking remember all these things, but bottom line is, I think the 10-year Treasury is like kind of like right, it's like Goldilocks, like right in the middle, right? Somewhere right in the sweet spot. Okay. So anyway, bottom line is, the 10-year Treasury was in that high 3% range pre 50 basis point cut. It's now at like 4.2%. Like, it's actually gone up like fairly substantially in a very short amount of time. Like an incredibly short amount of time. It's jumped up. And it has achieved the exact opposite of what the Fed was trying to do. The Fed was cutting rates ostensibly to lower borrowing costs. But what has happened since then? Borrowing costs have gone up. And what's so incredible about this, guys, is that, it's kind of like a battle between like technical policy factors, like what is the interest rate set at, and then like sort of like these qualitative, subjective factors, like what is the confidence in the US dollar and the 10-year Treasury, right? So like it's kind of like, you'd think that typically the Fed cuts a rate and the rate comes down and the borrowing cost comes down. Instead, it's had the opposite effect in this case, which suggests to me that the loss of confidence in the dollar, the erosion of confidence in the dollar, has now overtaken any technical factors like a 50 basis point cut, or another. Let's say they cut again on November 6th and 7th. I think they meet again on the 6th and the 7th. And so, so look out for, the next policy decision. I would call it November 7th. I think that's a Thursday. So it's just, it really portends negatively for where this country is economically and where things are going in terms of a recession or something worse than that. That the Fed has resorted to cutting rates, thinking that they'd gotten some signal from the market, like, oh, inflation had cooled, it was only like 2.5% instead of 3 or whatever they were going by. And so they go with that false signal, desperate to kind of juice the economy, probably to influence the election, even though nobody's ever going to say that. So they juice it with a 50 basis point cut, and they get the exact opposite effect. And not only that, guys, check the price of gold, man. Holy shit. Okay, I bought 5 ounces of gold. I know it's a pathetically small amount. Bought 5 ounces of gold in September 2023. Right? I bought it at like $18.60 an ounce. The shit is over $2,700 an ounce today, and it's only going higher. Now, a couple guys a couple prominent hedge fund guys have spoken out on this whole situation with treasuries and gold and that whole situation. Yeah, 35 trillion. Yeah, 35 trillion and counting, man. Not sure what the handle is there, but yeah, 35 trillion. But check the unfunded liabilities, man. 213 trillion last I checked, when you count Medicare, Social Security, all that crap. So, you know, like it looks like it's 35 trillion in debt, but it's 213 trillion in actuality, or probably higher by now, because I checked that number like a month ago. But anyway, guys, so Stanley Druckenmiller, okay, famous hedge fund guy, then like closed down his hedge fund and became like a family office. So I think he has a Duquesne family office. Druckenmiller shorting treasuries, like he's got 20% of his portfolio shorting U.S. treasuries, betting against the dollar, betting against government debt. I mean, absolutely staggering percentage of his portfolio, right? I mean, the guy isn't stupid, right? The guy is not fucking stupid. Okay, and then today, I saw Paul Tudor Jones, who runs a hedge fund. I forget the name of it. It was on the tip of my tongue. I literally just read it within the last couple hours. Anyway, Paul Tudor Jones, worth about $8 billion, runs a hedge fund, whatever. Saw him on Squawk Box, and don't get me started on Squawk Box, guys. You know, I mean, Squawk Box, let me just say this about Squawk Box before I get back to Paul Tudor Jones. Squawk Box is the financial propaganda arm of the oligarchy, okay? Like, I mean, I hope all you guys watching this, whenever, if you're watching it live or you watch it later, you realize that if you live in the United States, you live in an oligarchy, right? The powerful, political, you know, wealthy, corporate connected individuals really run the country and make the decisions, and the rest of us participate in a facade known as election day every 4 years to validate the whole scam. But inside that oligarchy, you got various propaganda machines, you know, CNN, Fox News, you know, all these outlets. But the financial propaganda arm is basically CNBC, right? So anyway, so I had to get that out. So Squawk Box has on Paul Tudor Jones, and Paul Tudor Jones is sitting there. I mean, check it out, guys. Like, just go look at. I saw it on Twitter. You probably see it 100 other places. But Paul Tudor Jones is sitting there like, "Hey, I'm long gold. I'm long Bitcoin. I'm long commodities." He said something like commodities are under-owned, or something like that. He didn't name specific ones. You know, hey Ariane, hello bro, how's it going, bro? You know, he didn't say which commodities specifically. You could probably take a guess. I mean, I'm sure he's talking about oil in there somewhere. But he said those four things, well, those three things. And then the fourth thing he said was for younger people. He said, you know, a lot of them go to the NASDAQ to hedge against inflation. But he said those were his three inflation hedges, okay? Gold, Bitcoin, commodities. He said, I'm long gold, I'm long Bitcoin, I'm long commodities. He's like, all roads, this is a literal quote, guys, all roads lead to inflation, okay? Now, I mean, like, a lot of us figured that out a long time ago. It's just significant for a guy like Paul Tudor Jones to sit on CNBC and say that, because, you know, CNBC is, you know, they're always hawking the wrong thing. So it's really interesting that he was on there talking about that in any depth, like the way that he was. And so, yeah, so then he went on to like compare us to Japan. He said something about how Japan is holding their interest rates at 0 and they do 30 basis points overnight. And he's like, there's only one way. The clip ended. There was like a 1-minute clip that was on. The clip ended with him saying, there's only one way out of this. You got to inflate your way out. Okay, so if that's it, if that's the end game here, guys, for the United States to inflate our way out of this, to literally dump helicopters worth of fucking money into the system, you know, helicopter Ben, you know, that whole thing. If that's where we're at, you better fucking own gold, you better own Bitcoin, you better own shit that goes up with inflation, right? So it made sense why Paul Tudor Jones was saying that in the position that he'd taken. But it's really, really significant, guys, that you got big heavyweights like these guys coming out, you know, onto the programs, into the mainstream and discussing this stuff the way they are. You know, I don't think anybody clued in doesn't see that this whole thing ends in a whole shit ton of inflation. I don't care who's the next president. I don't care who's the 5th president from today. It doesn't matter. The country's dead fucking broke. It's got to inflate its way out, and more than likely it'll create some kind of hyperinflationary scenario as it gets to that point. There's just no other way around it, guys. We're 35 trillion in debt. By the time you finish watching this video, it'll be 36 trillion in debt. If you look at the unfunded liabilities, throw in the Medicare, throw in the Social Security, throw in all the FICA garbage, and we're at 213 trillion. By the way, if you guys want to see the real number, go to it's like usdebtclock.org. I think I have cited it before many times on this channel. It's the one with just the numbers just going like this, all the numbers going up like all the time, all the debt figures and stuff like that. So if you check out usdebtclock.org, you will see excuse me, you will see that the unfunded liabilities, I think you can find it in the lower right. So if you go to that website, look in the lower right, look for unfunded liabilities, and about a month or two ago I checked that it was $213 trillion. Okay. Oh, and the other thing Paul Tudor Jones pointed out, guys, right at the beginning of the 1 minute clip, was that the interest on the debt was the second largest line item. I think he said it was bigger than defense, and it was only behind like Medicare and Social Security or something like that. So, you know, these guys know what's going on. Like, they know that we have, you know, trillion plus interest payments that we're making that is taking a huge chunk out of the budget. That's money that isn't there for something else. It's not there for defense. It's not there for education. It's not there for infrastructure. It's not there for welfare programs. It's not there for anything but the interest on the debt. And we only have more money to print. We only have more money to dump into the system to keep this house of cards afloat. It's an absolute house of fucking cards that's going to collapse. So anyway, guys, so I'm desperate to get more gold. I got to get my hands on some more gold. You know, got the stock portfolio just kind of chugging along with dividends and stuff like that. Just opened up my income factory. Check that out, Stephen Bavaria, Seeking Alpha. Open up an income factory account with Fidelity, pure income factory, just all kinds of weird shit, you know, collateralized loan obligations, senior debt, covered call funds, shit like that, just pumping out high dividend type stuff, 10%, 12%, 14%. So I got that going. And I got to get my hands on more gold. I'm just doing little bits of Bitcoin, you know, pardon the pun, where I can get them. Bitcoin's the smallest, by far the smallest piece of portfolio. But I got to add to the gold position. You know, before gold is 50,000 an ounce, I got to fucking add to that position. So anyway, guys, I got to hop off here in a second. Hadn't gone live in a while. Want to jump in. Markets are down 2 days in a row. 10-year Treasury is going to the fucking moon yield-wise. And everything looks to be unraveling right on time. So, yeah, interested in what you guys think and some of these conclusions, some of the premises that I put out there about the market, about where things are going with the debt, stuff like that. So let me know what you guys think when you get a chance. I appreciate you guys watching.